Hi, everybody. This is Gary Dune, and this is our nightly video report for Wednesday, September 14th, 2016. So we were pretty much all over the place today. The S&P at one point, I think, was up 15, then it was down some, I think it was like 10 or 8 or somewhere in that range. And then pretty much closed even. That's not really the sign. I don't believe it's a sign of a bottom. I think there's just a lot of people that are trying to front run the low, and they're finding themselves getting trapped, and from there they're selling their positions. But this is a longer term. This is a weekly chart of the S&P, and I'm showing you this for a reason. It's not even in a bearish view of things. Things could get ugly, and let me show you what I mean by this. If we're going all the way down from these from the 2009 lows, you can see that we have the red is, say, the bigger wave count here. And then it breaks into the smaller wave count, which makes the 3 here. And this is all of one big 1 here. So the reason why that's important is that we have 5 waves up, going from the 666 lows all the way up to these 2193 highs. So what that is implying is that we are going to get a pullback. And typically, wave 2s go anywhere from 38%, but more likely down to the 50, 62, or even 78%. Now, this is a longer-term view, and I'm not making the trade, or I'm not, saying that this is when and where it's coming to. But the thing is that it's wave structure-wise, it is really, really dangerous to be bullish, because you may be bullish, and we can see the S&P head all the way down to 990, and it still be a bullish wave count, because after this wave 2 finishes, the wave 3 is probably going, somewhere up into the 5,000 level. So that's what I mean by, like the people that are say perma bulls and stuff. I don't know if they're going to be long at that particular time, because I don't think anyone would be holding on if it's going all the way to 990. So that is it's risky for this reason, that we have the structure, we had the bearish divergences, and then we had a pop up here. So we didn't have one exactly right here, but you can see the MACD is starting to come down. But in any case, it's just saying that even if we went to 38%, which is a very shallow wave 2, it's still bringing the S&P down to 1,600. If it goes 50%, it's bringing down to 1,400. We haven't seen these levels since, going all the way back into 2012. So I'm going to show you what I mean by these wave 2s and where they can go. So here is the first wave 1 off of the lows. Now, we actually had kind of a shallow pullback on that, but yet it still made it to the it made it right to, I think, to 38%. Let me just kind of open this up a little bit so we can see it. So here you can see. So we made it right around the 38% retracement level. That's where this is right here. So that was kind of a shallow, and then from there, obviously, we had a much larger move off of that. So now let's take a look at, say, this wave 2 here, because remember, this is the start of the wave 3, but it will start back in 5 waves again. So if I take the same retracement level here and move it up to here, okay, so wave 1. I'm trying to. Okay. I didn't know where I was going. Sorry, I was confused. Okay, so here is the start of wave 1, and here is wave 2. Now, take a look at this, and do you see what I'm talking about? This actually retraced 78% of this wave 1 up. So the wave, and then from there, I mean, everybody got bearish on the markets, including me. I thought that was probably the top on it, but from there, we knew we then had the wave. It was the wave 3 of 3 going up, and that was the strongest move that we've seen this market make, and that was going from the low back in 2011 to the top in 2014. So that was the strongest move, and that was your wave 3 of 3, and that's why this count makes sense. So again, if it's just going to do a 38% retracement, which is a shallow retracement, it's 1608 is the downside target. If we're going to get deeper, now we're looking down at the 1427, 1247, or even 990, and it would still be a bullish case, just like this, how everyone got bearish, but yet we had the big move. That's what this would be. Now, I'm not showing you this to be making trades off of it. This may not start until sometime next year. I don't, it's tough to say. Maybe there's still more room on the upside before it starts, because we don't have any bearish divergences yet on the daily from this move here. But the point is that once this wave 1 does complete, that's when this larger move is going to be to the downside. So even if they do pop it up, it's still point wise, the larger move is still going to be down. So it all depends on the timing part. So anyway, let's move on. You can see the daily charts that the technicals are just starting to break down there. We're below the 50-day moving average. The bulls need to put it across the 2166. That hasn't happened yet. On a 60-minute chart, I'm not sure if we made lower low. No, we didn't. Here are the lows here. And you can see we came close to it, but we still didn't make lows, so there are no bullish divergences yet. But you can see we're pretty oversold, and we're at support. So that even though the market was weak today, I'd be really careful shorting, just because you could be asking for trouble, where the bigger point move short term, it has an above average chance of being up, not down. And what I mean by that is that we can get a quick move down, say, to the 2112, maybe even down to the 2102 pivot, which is about, let's just say 23 points down. But the reflex rally off of this is probably coming someplace up into this, the 2160 level. So that's your risk on it, is that, you go and you trade the short side on the breakdown, and next thing you know it, you're 50 points underwater on the S&P. So you can definitely short. It's just one of those things that if you take a short off of this break here, you want to quickly move your stop. Put it right into like this right above this high right here. So if it does pop up, then you're going to have a little bit of a hit, but it's only going to be like 20-25 points, not 50 or 60. So I would not. I think right now managing short positions is probably your best. I'd be very careful looking long, because there's a shot we're going a lot lower, a lot faster than what we've been doing for the past couple days, and that's the risk of it. But I'm also going to say there's risk of just jumping on the short side, just because, again, we're going to have some bullish divergences, and there's a 38% retracement that's at the 2116. So we have different support levels, and most likely the next move we would we'd probably see it come back up to these levels here. So be careful, manage short positions. I wouldn't be too crazy going long, just because, like I said, I think that is really dangerous as well. So you can see that the bulls are having a lot of trouble right now. Every push they try to make up is getting sold off. Again, I would just I'd be a little bit careful with things. If you're short, I would manage the shorts. I don't know if I'd be pressing any new shorts. Wait for, unless we get the rally like we got today, that brings us up 15 points. Hey, you know what? Take a stab on that. Well, you can do that. But like I said, right now this was the strong move. Right now we're in this little consolidation phase. You want to wait for the next strong move to kick in before getting really aggressive on the short side. So with that, let's see what plays out tomorrow. Have a great night, and I will talk to you guys in the morning.